Good evening. My name is Joe Lamargo. I'm the Public Information Officer for the Village of Orland Park, so welcome tonight. Mayor Dan McLaughlin and Commissioner Dan Patlak are both co-sponsoring this Property Tax Appeals Board, and I'm going to introduce the mayor in just a second. Orland Park Mayor Dan McLaughlin was first elected to the Village Board in 1983 and recently began his 21st year as mayor of Orland Park. However, we're all here to talk about taxes tonight, so I won't go into a long bio or anything, but just want you to know that anybody that lives in Orland Park, in the Village of Orland Park, that for the last 9 out of 12 years, Mayor McLaughlin and the Village Board have rebated a portion of what residents pay to the Village of Orland Park. So if you live in the Village of Orland Park, the tax rebate program is going on right now, and you can go to during the working hours Monday through Friday from 9 to 5, or I'm sorry, from 8 to 5 over in the Village Hall and fill out an application, and you can do it online. You can go on our website. It's a big section. You can actually apply for a tax rebate online. So if you live in the Village of Orland Park, you can do that, and you can get the portion that you pay to the village, which is about 6% of your property tax bill. So with that, I'm going to introduce Mayor Dan McLaughlin. This is for the camera.
All right. Thanks, Joe. Whoops. Sorry. I'll be very quick. I appreciate Dan coming out. We try and do this once or twice a year, and I know the township does too. So, I mean, there's nothing more important to any of us than taxes, and if these guys can help all of us learn how to challenge our taxes and maybe get them reduced a little, that's a good thing. So I appreciate everybody coming out. I'm just kind of curious, how many people is this the first time you've come to one of these? Oh, all right, that's good. That's good. So we hopefully have a lot to learn tonight. But Dan Patlak's been a commissioner for a few years, does a great job, and that's their whole that's their whole job. The Board of Tax Review is there to help people make sure that you're paying your fair taxes, not anymore. So hopefully that you get some help tonight. I just want to clear up something Joe said real quick. 9 of the last 12 years, the village has been rebating property taxes. The very first year we introduced that program, we rebated half the taxes from the previous year because we started it at a certain time in a year. That's all we could do. The next several years, 6 or 7 years, we rebated your full Orland Park portion of your taxes. When the economy hit the tank a few years ago, we said, hey, we've gotten ourselves into a lot of road projects that we need that money. We can't rebate taxes for the next couple of years, but we will bring it back as soon as we can. We did 2 years ago, partially. Last year, I should say, and this year the same thing. So it's going to be a certain dollar amount that we budgeted, about $2.5 million. It'll be divided amongst the amount of people that apply for the rebate. I am really hoping that next year we can get back to the full rebate of your Orland Park part of your taxes. So I just wanted to clear it up a little. Different years we've given different rebates for different circumstances, for different reasons. But anyway, well, I appreciate you coming tonight. Hopefully this helps you and we can gain some benefit out of it. And this time I'd like to thank and introduce Dan Patlak, Cook County Commissioner, Board of Tax Review Commissioner. Thanks.
Thanks a lot, Dan. I appreciate the intro. Hi, everyone. The mic I'm using is for the filming that they're doing. It's not amplifying my voice, so if anybody back there can't hear me, just raise your hand and I'll try to talk louder. My goal for you tonight is that by the time you leave, you're going to know at least a little bit more about the overall property tax system, and you'll know a lot more about how to file the best possible appeal at the Board of Review to give you the best possible chance to get a reduction on your assessment. So I'm going to divide the presentation into 3 parts. The first part, I'm going to answer the most frequent question I've been getting since about 2007. Then we're going to spend a little time talking about exemptions, and then we're going to talk about the nitty-gritty of how to file an appeal at the Board of Review. I have a lot to say, so I'm going to try to talk fast.
Can I ask you a question before
Sure.
you take off? Can you, somewhere in your presentation, touch on, I think everybody, I've gotten one myself at home, and I'll probably get more. We get mailings from companies, law firms that say they'll get our taxes reduced by $1,000 or whatever. Can you address that at some point in your talk tonight? Because a lot of people see that letter and wonder what to do.
I will do that. No problem. Okay, so that question that I get more often than any other question is, and especially since 2007, hey Dan, how is it that my property taxes continue to go up, but my property value has gone down. And now, of course, I know that property values have bounced back at least a bit since 2007, 8, 9, when they really took a nosedive, but they're still down for most of us below what they were before the recession. So to answer that question, there's several answers. To answer that question, we have to start out by talking about where your property taxes go. So without looking at your tax bill, someone tell me one place that gets your property taxes. The library. Someone else, everybody else yelled out, schools. So he's different, that's right. But the library is a place that the taxes go. The schools, though, are also probably the #1 place. Not probably, they are for sure. Elementary, high school, community college. And I know, I live up in Wheeling, by the way. My district is really big, and it includes this area, but it starts way up north. And I know a year ago, when I got my property tax bill, the second half bill on July 1st, I looked at it, and I looked at all the property taxing districts, and I looked at the three school districts, and I added them up. And the total for the schools was 70% of my tax bill. When I travel throughout the district, I see that that burden for schools probably varies, perhaps as low as 60% in some places, and I've seen it as high as 76%. So schools take the lion's share of your property tax burden. But what other places besides the library? Fire district. Now where I live in the village of Wheeling. The village runs the fire department, but some places have fire protection districts, and I know Orland has one, right? So they're one of the things on your property tax bill where your taxes go to. What else? Park district, yes. The police department usually is under the village. What else? The mosquito abatement district, yes. What else?
The forest preserve.
That's right. Cook County Forest Preserve District, separate from Cook County. What else? The what? Tinley Park Sanitarium? Are they on there? In my area, we don't have a Tinley Park Sanitarium. We don't even have a Wheeling Sanitarium. But okay, that would be one thing on your tax bill. What about the County of Cook? The Metropolitan Water Reclamation District? If you live in Orland Park, the village of Orland Park, or whatever village you happen to be in, anything else?
What about, wouldn't the sanitarium come under the county health facilities?
You know, I don't really know. You have the township of Orland, or whatever township you live in, that's part of your tax bill. So, depending on where you live, there's probably between, 12 and 16 different governmental units or taxing districts that get your tax money. In some places, not in Cook County, they actually have street lighting districts. In other words, a governmental unit that's in charge of lighting the streets. I don't think they have that in Cook County, but there are other places. So anyways, you got all these governmental units that get your property tax money. So every year, these governmental units, they have a special meeting. It's called the levy meeting. Now, levy is just another word for demand for taxes, all right? Demand for money. They have a meeting, they look into the future, and they say, how much are we going to need? How much will we need for our operations next year? And whatever they think they need, that's what they ask for. Now, they're not unlimited as to what they can ask for. Back in the early 90s, the state legislature passed something called property tax caps. They didn't really cap property taxes, but they did limit the rate of growth. And what the law said was that you could only raise property taxes for particular taxing districts either 5% or the rate of inflation, whichever is less. Now, there's a couple of exceptions to that rule, which I'm going to explain to you in a little bit, but let's just talk about that. So there's a limit. Now, since the early 90s, best of my recollection, the rate of inflation has not been more than 5%. We never hit that 5% limit. And I would say that the average rate of inflation has been somewhere around 3%. The last few years it's been less, but other years it's been more. So let's assume that we're in an average year where the rate of inflation is 3%. Let's also assume that we have a high school district that's having their levy meeting. Now, I got to tell you, most governmental units, most taxing districts will raise their levy to the maximum they're allowed to by law. Now, that's not in every case. I can tell you, in my village in Wheeling 2 years ago, they didn't raise the levy at all. They had a 0 levy increase. But that is the exception, not the rule. The rule is really, let's raise it to the max. So let's assume that your high school district has their levy meeting and they decide to raise their levy to the maximum that they can by law, and the rate of inflation was 3%. All right? Let's also assume that in the previous year they were asking for $100. $100 total from their taxing district. So when they raised it 3%, the next year they're asking for $103. The following year they do the same thing, they raise it another 3%. Now they're asking for $106.20. The following year, it goes to $109.90, and then the year after that it'll be $114.50, and so on and so on. Now you notice I wasn't adding 3 plus 3 plus 3 plus 3. That's because of something we all learned about in grammar school or junior high, and that's the power of compound interest. It's good when you put your money in a savings account. It's bad for taxes, right? Because when the levy is raised 3% and another 3, it's on top of the previous increase, okay? And so for that reason, values can go down, but your taxes can go up. The reason your taxes go up are this. Every year, more money is demanded. All right? Because it's not just the high school district, it's the library, the park district, the village, the township, the elementary school, so on and so forth. Generally speaking, they're raising their levy to the maximum, so that means more money is being asked for from one year to the next. Now you might say, well, yeah, but wait a second, my value went down in my house and I should pay less. Well, maybe you should pay less, but that's not the law. That's not how it works. Joe wants to tell me something.
Yeah. Real quick too, just again, and being the public information officer, Village Orland Park, the village itself also kept the levy flat, so they did a 0 increase as well for this year.
Okay, so the Village of Orland Park kept the levy flat.
Right.
Okay,
and
thanks for adding that in.
And School District 135 also kept the levy flat this year as well. So
thanks, Joe.
So
okay. So anyways, let's assume all other districts raised it, and they probably did. So you have declining value in your property, but you have an increase in what's being asked for by the taxing districts. Now, no matter what, the taxpayers who exist, that's you, that's me, that's everybody, people that own residential properties, commercial, industrial, vacant property, they've got to pay what's asked for. So it's the same property. So even if the properties go down in value, they're still responsible for paying the request. And that's why when values go down, taxes can still go up. Now there's a couple of other reasons. One quick one is exemptions. The most common exemption out there is the homeowner's exemption. To qualify for the homeowner exemption, you have to live in the home as of January 1st of the tax year in question, and you need to own the home. Almost all homeowners qualify for that exemption. If you got that exemption last year, but then for some reason you didn't get it this year, your taxes likely would go up. Same thing for the senior exemption. If you got it last year, but you didn't get it this year, taxes could go up. Now I'm going to circle back around when we talk about exemptions. I'm going to talk about what you can do if you didn't get the exemptions you were entitled to, but now I'm just going to give you the third reason why taxes can go up when values go down. That reason is the economy. To talk about that, I have to explain to you something. Cook County is different than all 101 other counties in Illinois. It's different in how it assesses property. In all other counties, all types of property are assessed at 33 1/3% of their real market value. So for instance, if you owned a factory in Will County, and you owned a grocery store in DuPage, and you owned a house in Lake County, and each of those properties were worth $100,000, the assessment on each of those properties would be exactly the same, $33,333.33. But it's different in Cook County. In Cook County, let's say you live in a nice neighborhood. You have an expensive home, it's worth $500,000. The assessment rate for residential property in Cook County is 10%. That means your assessment would be 10% of $500,000, which would be $50,000. Let's assume, though, that down the street you have a neighbor, and she is a beautician. She owns her own standalone beauty shop out on one of the busy streets here in Orland Park. That beauty shop is also valued at $500,000, but it's a commercial property, which means it's assessed at 25% of its value, which means that the assessment will be $125,000. That means that that business owner is going to pay 2.5 times more for their business property in taxes than a residential property owner owning something of the same value. And that's not counting the exemptions that a residential property owner is entitled to that a commercial property owner doesn't get. Now, I'm telling you all this for a particular reason. I want you to just keep that information in the back of your head, and we're going to circle back around to it. Now, let's take a businessman. His business is owning strip stores. And it's 2007. He owns a strip store on a busy street. There's 5 units. They're all rented out. Then the recession hits. The economy nosedives. The stock market goes down, property values go down, people are thrown out of work. One of those units that's renting is a real estate office. After about 6 months, the owner of that real estate office figures out that he's not selling any property, he's not making any money, he allows his lease to expire, and he moves out. Next door is a florist. Same thing happens with the florist. After 6 months, the florist figures out that in a recession, flowers are not a necessity, and his sales are way down. He also allows his lease to expire, and he moves out. Now what do you have? 2 empty units. So what does the owner of that property do? Well, he goes out and he hires a commercial real estate broker to rent out those 2 units. And the broker puts the information about the units on the multiple listing service. He lists them on the internet. He advertises in the newspaper. He puts a sign out. He passes out flyers. He talks to other realtors. He talks to other business owners in the area. Tries to get them to leave where they're at and come to this new place. The only problem is that in this recession, they're not moving because they're talking to their landlord first, and their landlord's willing to do anything to keep them because he wants to keep that regular monthly rent coming through. He does not want to lose that revenue. He knows if they leave, it's going to be just as hard for him to rent his place as it is for the guy renting that's taking his people away. So they don't move. 6 months goes by, and the units are still vacant. So what does the owner do now? Well, you know what? He knows something. He's a smart guy. He knows that the value of his commercial real estate is directly tied to the income-producing potential of that real estate. And so he files an appeal to get his assessment reduced with the Cook County assessor. And he probably is successful and gets a substantial reduction. And remember, I told you that commercial real estate pays 25%, or they're assessed at 25%, so they pay 2.5 times more than residential real estate, which means that the impact is 2.5 times more than if a residential piece of property went down in value and had its assessment reduced. Now, you might say that, gee, that's too bad because the local school, the library, the park district, the village, they're going to have to cut back on some of their services because they're not going to collect as much from that property owner. Not true. They're going to collect just as much as they levied. What's going to happen is that whatever money that that property owner saves on his next tax bill is going to be made up by all other property taxpayers. Residential, commercial, industrial, vacant property, everyone's going to pay a little bit more. Now, it might not be much more. It might only be $1 or $2, right? And by the way, that will impact the people who live in that area the most, but it will impact everybody that lives in Cook County. So even if this happens in Orland Park, it'll impact you the most, but it'll impact even a guy like me in Wheeling, but just a little bit less, because I only have Cook County, the Forest Preserve District, Water Reclamation District, and Mosquito Abatement District in common with everyone that's down here. In any case, now imagine, take that example I gave you, multiply it over hundreds or thousands of times. Not just strip stores, but office buildings and all kinds of commercial and industrial property, including some very large ones. Maybe a factory, or a Kmart, or a Walmart. Where I live, some years back, Kmart went out of business. They've now torn it down. It's a big empty lot. My guess is that that property is paying hundreds of thousands of dollars less in property taxes now than they were when that Kmart was a going concern. That means that everybody in Cook County is paying a little bit more, but in particular the people in the village of Wheeling are paying a lot more because of the impact of that large property paying less in their property taxes. So once again, your values can go down, but your property taxes can go up. So I hope that sort of illustrated for you a little bit about the overall property tax system and how it works, and why values can go down, but taxes can go up. I see a question in the back, but I'm not taking any questions till the end, just so we can get through all this. Okay, next thing I want to talk about is exemptions. I mentioned to you that if you had an exemption last year, but you don't have it this year, you'll end up paying more money. So let's talk about that. The homeowner's exemption is the most common exemption. It renews automatically every year. But I can tell you that I was the Wheeling Township assessor for 5 years. And during that time, we would have people come in from time to time, and they would say, you know, my tax bill is higher than I expected it to be. Could you take a look at it and let us know, let me know if you think that there's some problem. So sometimes we look at the bill and we'd see that they weren't getting their homeowner's exemption. And so what we would say to them is, hey, you didn't apply for your homeowner exemption. And oftentimes they would say back to us, what do you mean we didn't apply? I've been living in my home for 15 years. I've been getting it every year. So the fact that they weren't getting it came as a complete surprise to them. And we couldn't understand why that exemption had been removed. But after this happening a bunch of times, we finally figured it out. Something was happening once in a while. Not all the time, not most of the time, but once in a while, and that's this. People were doing something to the property that was causing the assessor's office to believe that the title to the property had been transferred from one person to the next. And when the property title is transferred, the assessor automatically takes away all the exemptions and waits for the new owner to reapply for the exemptions. So that people were doing one of three things. They were either refinancing, or they were putting the property into trust, or they were quit claiming the property from one owner to the other owner. Maybe a divorce situation, something like that. And as a result, the assessor, at least in some cases, was removing the exemption. So I want to suggest to everyone here that when you go home tonight, you take a look at your most recent tax bill. That would be the tax bill, the second installment tax bill that you got in 2012. Go down to the bottom of the bill. There should be a line that says homeowner's exemption. And next to that line, if it has a dollar amount like $300 or $500 or $900, that means that you got the exemption that you were entitled to. But if the amount is 0.00 and you were entitled to the exemption, then there's something you can do about it. You can file a certificate of error with the Cook County Assessor's Office, and you can get a refund for the amount you paid over and above the amount you should have paid had you only received the exemption that you were entitled to. This is true for the senior exemption as well. 3 years ago, the senior exemption renewed every year. In other words, once you qualified for the senior exemption, you had to be 65 years old, you had to live in the home. Once you qualified for it, it renewed automatically every year. But the state legislature, in its great wisdom, changed the law, said it had to be renewed every year by the property owner. And as a result, a lot of property owners, not knowing that the law had been changed or not knowing how to renew, had lost that senior exemption. So look on your bill. If you're entitled to a senior exemption and you didn't get it, you can file a certificate of error for that as well. And you can go back 3 years for both exemptions. So you can look at your 2012, 2011, and 2010 tax bill, and if you didn't get, excuse me, if you didn't get any of the exemptions you were entitled to for any of those 3 years, you can file a certificate of error and you can get a refund. And that refund could amount to potentially thousands of dollars, depending on how many years you didn't get your exemption. Okay, so now let's move on from exemptions to filing an appeal at the Board of Review. The most common type of appeal you can file as a residential property owner. And by the way, this presentation is for residential property owners, and most of the information I'm going to give is going to be for single-family homes, not for condos. But if you have any questions about condos, you can come and see me or one of the other people after this is over. We can answer them for you. In any case, lack of uniformity is the most common reason for appeal at the Board of Review. All that really means is that your home compared to other similar homes is assessed higher. I'm going to give you a detailed explanation about how to put together a lack of uniformity complaint. But first, I want to go through some other reasons why you might appeal at the Board of Review. So the next reason is recent purchase. If you purchased your home in the last 3 years, that means since January 1st of 2010, we can use the purchase price to help us determine what the assessment should be. So let me give you an example of how that would work. Let's say right now you're assessed at $30,000. but you bought your house a year ago for $250,000. We'll take the $250,000 purchase price, we will apply the 10% statutory assessment rate for residential property, and we will say that the assessment ought to be 10% of $250,000, which is $25,000, so you'll go from $30,000 down to $25,000. Now, if you were already at 20, we won't raise you, okay? And we won't use that purchase price as a reason not to give you a reduction if you appeal for another reason, and that other reason is convincing to us, and we think you do deserve a reduction, for instance, based on lack of uniformity. The evidence that we need, if you have a recent purchase, is your closing statement. Now, I have to tell you, the purchase has to be an arm's length transaction. That means it must not be between two relatives, it cannot be a short sale, and it cannot be a foreclosure, okay? So no transactions between relatives, no short sales, and no foreclosures, arm's length transaction. But if it is, we can use the purchase price. Your evidence will be your closing statement, which has the sale price, the date of sale, and also the name of the buyer and the seller. You might also want to give us a little affidavit, write something out saying this is an arm's length transaction, not a short sale, not a foreclosure, not between relatives. Send it in. That should be sufficient to grant you a reduction. Next reason for appeal, market value. The assessor puts a market value on every property. So if the assessor says that your house is worth $300,000, but you're convinced it's worth only $250,000, you can do a market value appeal by giving us information about homes like yours that have sold recently, but sold for less than what we say your home is worth. In other words, they have to be homes that are similar to yours and homes that are in your neighborhood. As far as the specific evidence, if you give us an appraisal, we would consider that to be expert testimony. I can't tell you that we will definitely embrace the number on the appraisal. We may. But what we will do with the appraisal is we will take a look at it and we will evaluate the appraisal and we will determine for ourselves whether or not we think it's a good appraisal or a bad appraisal. Other information you can give us is the data on the sales. Now you can get that from two places. Either your local realtor can give you information on recent sales, or you can go to your local township assessor. They have a great database, and they can look up sales data for you, and their sales data goes back quite a few years. Of course, we would only want sales data in the past maybe a year and a half or so, recent purchases. In this case, we will accept data that is not arm's length transaction. However, we will give more weight to arm's length transaction purchases than those that are short sales or foreclosures. So my suggestion to you is that if you give us a bunch of sales, they should be weighted heavily towards arm's length transactions and lightly towards the foreclosures and the short sales. All right, next reason for appeal would be a mistake in the description of the property. Now, when you get reassessed, the assessor sends you a description of your property, and there's all kinds of descriptive items. How many bedrooms, bathrooms, do you have a garage, do you have a basement, is the basement finished or unfinished, is the garage a two-car or one-car, is it attached or detached, what's the age of the property, is there a side drive, what kind of roof do you have, the construction style, on and on. For our purposes, the most significant mistake that the assessor can make would be in the square footage of the building that you own. That is the living square footage. The reason for that is because if the assessor says that your house is 1,500 square feet, but it's really only 1,000 square feet, that means you're paying 50% more on the building portion of your assessment than you should be paying, and that can end up to be a lot of money. So, how do you measure your house? Well, you measure it from the outside dimensions. So if you have a simple ranch-style house, you could take length times width. It includes everything inside the house, the walls, the bathrooms, the hallways, the closets, and of course all of the regular rooms. It doesn't include a couple of things though, and you should make note of this. It does not include an attached garage. Does not include a basement, even if the basement is finished and has a bedroom and a bathroom. Does not include a lower level family room like you have in a bi-level style house. Does not include an unfinished, unheated attic. Does not include a three-season room, you know, the kind that's built onto the back of the house oftentimes, rectangular shape. You use it in the spring, summer, and fall, but you don't use it in the winter because it's not heated. Okay? It also does not include a two-story foyer. You know, you walk into the house, you look up, and it's got a ceiling sort of like this, all the way to the second story. In other words, there's no second-story living area. Sometimes the assessor could make a mistake. He could say, he could look at the house from the outside and see that it's a two-story house and think there's a second story everywhere, but above the foyer, and maybe if it's a large foyer, 15 feet by 10 feet, that's an extra 150 feet that the assessor says is up there that really doesn't exist. And by the way, if you have a two-story living room or family room, that can be even more square footage that could be falsely added into your square footage. The evidence for that. Plata survey could be good. If you have a simple ranch-style house, we can look at length times width. If it's a simple two-story, we can look at length times width times 2. Sometimes a Plata survey is not sufficient, though. So an appraisal can be good. An appraisal always says the total square footage of the home. If you get a state-certified licensed architect to inspect and measure your home and write us a letter on his letterhead testifying to what the real square footage is, we would consider that to be expert testimony. Any other evidence you can give us? Photographs. If you've got architect's drawings, and the architect's drawings are clear in stating what the square footage of the house are, anything that can help, just keep in mind that the person you're sending this to has never seen your house, never will see your house, and unless you ask for a hearing at the Board of Review, and most of you won't, he's not going to talk to you. So you got to use common sense and ask yourself, is what I'm sending in going to be sufficient to convince the person reading the written documentation that the assessor has made a mistake and that what I'm claiming is correct? Last reason for appeal, vacancy. Let's say something happens to your house like you have a fire. You have to move out of the house while you're settling with the insurance company and working with contractors to get the house fixed up. For the period of time that you're out of the house, we can grant you a vacancy on the building portion of your assessment. Evidence. Fire marshal's report is good. A letter from the village withdrawing your occupancy permit, and then maybe a subsequent letter restoring the occupancy permit. That way we know you had to move out on this date, and you're able to move back in on this date. Pictures of the outside and inside damage to the house can be good. An affidavit from you explaining what happened. An affidavit from your neighbors testifying to the fact that you moved out on a particular date and then that they saw you move back on another particular date. Any other information that would help convince us that in fact you had a fire and the fire forced you to leave the house for a period of time and what that period of time was. Vacancy is not limited to just fires. If you have a flood, if your house gets hit by a tornado, if a tree falls on the roof and makes a big gash in the roof, if you have mold in your basement and the mold has gone up your ventilation system and is making people in the house sick, that would be a reason for vacancy. So whatever comes up, whatever forces you out of the house to no fault of your own, we can give you a vacancy. Just make sure that the evidence you give us is compelling so that we can understand that you, in fact, had to leave, what date you had to leave, and if you've returned, what date you came back on. So those are the major reasons for appeal. I said I would give you a detailed explanation on what to do on a lack of uniformity. That's probably what most of you will be appealing on. So let's take a few minutes and talk about what we really mean by uniformity. There's 5 or 6 major things we're talking about. The first thing is classification. All residential property is Class 2, but it's broken down into subclassifications. Class 202, 203, 204, 234 is a bi-level, so on and so forth. Your house is one of those classifications. Whatever classification your house is, we want you to compare to other houses of the same classification. The most common class house in Cook County is a Class 203. The definition of a Class 203 is less than 2 stories between 1,000 and 1,800 square feet. So if you live in a Class 203, compare to other Class 203s. If you live in a Class 205, compare to other Class 205s, 234 to 234. Next is neighborhood. Every 3 years, the assessor draws neighborhoods in every township. It's not the kind of neighborhood you're accustomed to. It's not associated with your school or a local park or your church parish. It's just a geographic area. It could be several blocks long and wide. It could be several miles long and wide, but it's an area where the assessor believes that the homes are in some way homogeneous. Every neighborhood is given a number. Could be number 9, number 19, number 28, number 105. Whatever number neighborhood you're in, please compare your home to other homes in the same neighborhood. The exception being to that would be if you have such a unique home that there are no other homes like yours in the neighborhood, then you may need to go to the next closest neighborhood or the next neighborhood that is most like yours. But that is the exception. Usually you can find a bunch of homes that are like yours in your neighborhood. Next, construction style. As far as the assessor is concerned, there's 4 construction styles. Brick, which is the same as masonry, brick and frame, frame, and stucco. To the best of your ability, compare your home to other homes that are of the same construction style. Now, we understand that when you're staying within the same neighborhood and the same classification code, that may limit your comparables. And if you can't find any homes that are of the same construction style which will justify a reduction, then you can use something else. We're not going to throw those comparables out. We may make an adjustment because it's a different construction style of some sort, but you can use those to prove your case. Next is age. If you have a 50-year-old home, try to compare to other 50-year-old homes, or 40-year-old homes, or 60-year-old homes. Please don't compare to homes that are 10 years old or 110 years old, because those just aren't similar at all in age. Beyond that, proximity. I mentioned that we want you to stay within your neighborhood, and you can give us a comparable property that's a mile away. We would much rather, though, have comparable properties that are closer rather than farther. We would much rather have something that's 3 blocks away than a mile away, or 2 blocks, or 1 block, or across the street, or on the same block. We're going to give more weight to comparable properties that are close rather than comparable properties that are far. Same thing goes for square footage. If you have a 1,100 square foot house, class 203, we would much rather have you compare your home to other homes that are 1,000 or 1,200 square feet or 1,100 square feet, the exact same as your house, rather than homes that are 1,700 or 1,800 square feet. Now, you can give us those comparables. We will consider them, but again, we're going to give more weight to those homes that are more similar in size than those that are farther away in size. So that's the type of thing you're looking for when you're looking for uniformity. Now, let me give you the formula that we use to help you determine whether or not you're overassessed. And I'll give you an example. Let's say you own a class 203 home and it's 1,500 square feet. The assessment on the home is $25,000. The assessment is broken down into 2 parts. The land, $10,000. The building, $15,000. $10,000 plus $15,000 equals $25,000. Most lack of uniformity appeals are based on lack of uniformity on the building, not the land. That's because the assessor tends to do a very good job on the land, but not such a good job on the building. All right, so about 98% of lack of uniformity appeals are based on appealing the building and not the land. If you do think you have a land problem, you can appeal that. My example that I'm giving right now is not for the land, though. So you've got a $15,000 assessment on the land, you've got a 1,500 square foot home. What you want to figure out is, what's the assessment per square foot of my building? All right? To do that, take the building assessment, 15,000, divided by the building square footage, 1,500. If you divide 15,000 by 1,500, what do you get? Someone be brave. $10. Yes, it's $10. Very good. Okay. So now you know you're at $10 a square foot. That's your starting point. So when you do your research and you're looking at all the other houses that are like yours in your area, if you find a pattern of homes where they're at $9.50 and $10 and $10.50 and $11 and $12 and $13, you're probably pretty fairly assessed. But if you see a pattern of homes where they're at $9 and $8 and $7 and $6 a square foot, well, you know you've got some pretty good evidence to come to the Board of Review and claim that there is a lack of uniformity and ask for a reduction in your assessment. Now, where do you get this information? I can give you 2 good places. in my opinion, the best possible place is in the room in your house where you have a computer. Because you can go to the Cook County Assessor's website, which is cookcountyassessor.com, and it's on the handout that we gave you. And you can look up information on all 1.8 million parcels of property in Cook County. The assessor has a great website. It's got all kinds of really good information on assessments and taxation. The database has all the property in Cook County. It has a photo of every property. It has a description of every property. And it has all those things I was talking about earlier, the property classification and the neighborhood and the square footage, so on and so forth. Go to his website, look up your property, print it out, and figure out the assessment per square foot. Then do your research on the other properties. You can do a variety of different queries by township and neighborhood, property classification. Pull up the properties, click on them, do the calculation, see if they're assessed higher or lower per square foot, see how similar they are to your house, and pick out the ones that you think are best, the ones that will best justify your case for a reduction. What you want to do once you've picked them out is print them out. It'll usually be 2 or 3 pages, depending on how your computer is set up. And at the top of the printout for your property, write subject property. In the first page that has the description of your property, write out the assessment per square foot. So if it's $10.17, write 1017 and circle it. On the comparable properties, at the very top of the first one, write comparable number 1. And then in the body, write the assessment per square foot. So if it's $8.29, write 829 and circle it. Do the same thing for the rest of your comparables. We suggest that you give us no fewer than 3 comparables. You probably don't need more than 5 to make your case. There's no limit, though. You can give us as many as you want. Okay? But probably you don't need more than 5. My suggestion is, focus in on the ones that you think are the most like yours and that, of course, are assessed lower to make the best case. Now, the other place that you can get your information from is the local township assessor. Once again, they have a great database. They are there to help. I always call the local township assessor the taxpayer advocate because that's what they do all day long. They help the local taxpayers. So you can go to the local township assessor, and if you need a little bit of help, he'll give you a little help. If you need a lot of help and you need him to look up everything for you and really advise you as to how to put together the appeal, then you can do that as well. So you've got 2 good places to go to, either the computer in your house or the local township assessor. Now, what happens once you turn in the appeal? This is it. The Board of Review is run by 3 elected commissioners. I happen to represent most of suburban Cook County, including all of Orland Township. But despite that, even though you all, probably all, live in my township or my district, what happens with the files is once they come in, we create a paper file. The files are distributed randomly to the analysts who work for each of the 3 commissioners. So your file might come to an analyst that works for me immediately, or it may go to an analyst that works for Commissioner Rogers or Commissioner Cabinargi. In any case, the first analyst will review the case, come to a decision, write the decision in the jacket of the file, initial it, and then rotate that file to an analyst who works for another commissioner. That analyst will do the same thing, then it'll be rotated to the 3rd analyst. In order to get a reduction, 2 of the 3 analysts must agree that a reduction is warranted. As far as filing your appeal, for those of you who live in Orland Township, and I think that's most of you, the appeal period has begun. The appeal period will expire on December 3rd, which means that if you file your appeal on December 4th, it will not be accepted. It will be too late. So my advice to you is file your appeal no later than December 3rd. Now there's 2 ways to file. The first way is to use the paper complaint form that all of you were handed tonight, fill it out. You can either mail that in or deliver it to the Board of Review downtown or to any one of our 5 suburban satellite offices. We have a satellite office at each of the suburban courthouses. Or fill it out tonight and hand it back to me or one of my staff members that is here tonight. We will deliver it to the Board of Review for you. It'll be time-stamped. You will receive a letter in the mail in a couple of weeks confirming that we received your complaint. That's one way to do it. Now there's another way, and I think this is the best way. because it gives you instant gratification. You can file online. Go to cookcountyboardofreview.com. Once you get to the home page, you can't miss it. It's going to say File Online. Click it. All you need then is your property index number, and you must have an email address to file online. If you don't have an email address, you have to file on paper. But if you have your PIN number, you have your email address, in about 90 seconds, you can fill out your complaint form. As soon as you click Enter, it'll generate a question for you, and it'll say, would you like to print out your complaint form? You should answer yes. Print out the complaint form. The complaint form will have your complaint number on it. That's the number that files your complaint all the way through the process. And also, it'll generate an email to you that confirms, in fact, that you have filed an appeal. This way, you have instant proof that you filed your appeal. And if by chance, at some point down the road, you make an inquiry with us and we say, oh, gee, we can't find your appeal. You must not have filed. You can say, no, no, I filed. I've got the email confirmation. I've got the complaint form that I printed out. Here's my complaint number. Go look it up. So my suggestion is, if you feel comfortable using the computer, file online. However, if you want to file your paper complaint form, we're more than happy to take the forms. We've never lost one going from a seminar back to the Board of Review, so I don't expect that to happen. But if you want to feel more secure and have assurance immediately, file online. All right, last thing I want to tell you is this. About 8 weeks from the time we close at the Board of Review, which will be December 3rd, you will get a letter in the mail informing you of our decision. It's either going to be a no change, which means you didn't get a reduction, or you'll get a reduction of some sort. If you are unhappy with a no change, or if you feel that the reduction you got was not sufficient, and you really deserved a greater reduction, you have two mutually exclusive options to pursue to go on in terms of filing an appeal. You can file a further appeal with the Circuit Court of Cook County. Now, you should know that if you file there, they are backed up probably about 4 years. And you may need an attorney to navigate the courtroom. There may be some court costs. But if you feel that that's the best venue for you, you can file with the Circuit Court of Cook County. The other option is a state agency called the Property Tax Appeal Board, PTAB for short. Now, information about PTAB will be on the letter you receive from the Board of Review informing you of our decision. You must file your appeal with PTAB within 30 days of the date of the letter you get from the Board of Review. If you take more than 30 days, you may end up forfeiting your right to appeal to the Property Tax Appeal Board. My experience with them is that they are pretty fair with homeowners. There's no charge to appeal at the Property Tax Appeal Board, and you can appeal for any reason. So in other words, if you appealed at the Board of Review based on market value, but now you think that maybe that's not a good reason, you could appeal to the Property Tax Appeal Board based on uniformity or recent purchase or any other reason that you think is valid. Now, I have to tell you something about the Property Tax Appeal Board. They are a severely underfunded state agency, which means that for commercial and industrial property owners, they're backed up 4 years also. For residential property owners, they're backed up about 2 years, which means that if you appeal to PTAB and you eventually prevail, you will already have paid the property taxes on the assessment that you're appealing. So what you'll end up doing is filing a certificate of error with the Cook County assessor, and you will end up getting a refund for the amount you paid over and above the amount you should have paid had you only had the PTAB decision from the very beginning. When we first started, Mayor McLaughlin wanted me to talk a little bit about the mail that we get from various attorneys advertising their services to help you file appeals with the assessor, with the Board of Review, and with PTAB. I can tell you I get those mailings too. And there are attorneys out there whose living depends on helping people file appeals with the county and with the state. There's nothing wrong with engaging those attorneys' services. I would say for those of you that are here tonight, if you have a relatively simple lack of uniformity case, or anything else that I described here that's not too difficult, you probably don't need to hire an attorney. However, you may feel that you don't want to do the research. All you want to do is sign your name and turn it over to somebody else. And if that's how you feel, then you should go ahead and do that. And you can save the work and the time and the effort. Sign your name. Now, of course, attorneys normally expect to be paid. They will charge various amounts. It's all negotiable. So my advice to you is, I don't think you need to do it. The information I've given you is good. If you need help, you can go to your local township assessor. But if you don't want to do it yourself, feel free to engage an attorney, and the attorney has as good a chance as you do to get a reduction for you at the board and at the assessor's office. So with that, I'm going to conclude.